Hello, good afternoon, everybody, and welcome to a midday update for Thursday, November 10th of 2016. This is George Papsov from Trade Pro Academy. I want to remind you today's presentation is for educational purposes, not to be taken as investment advice or recommendations. Trading is a risky business in which you are in charge of 100%. You have to own your decisions, good or bad. All right, let's get started in today's afternoon's webinar. I can't even speak. How am I going to do this thing? What a wild start. I mean, what a wild presidential election overall. And even more wild market leading up to it and trading through it. All right, so let's look at some stuff that's been going down here. I'm going to start with this morning. We had some volatility. What the heck's going on? Why is this thing? I don't know why the toolbar is not hiding. Gotta love Windows. I'll have to edit that out. All right, guys. Here's what the S&P 500 is looking like so far. Massive sell-off after the during the presidential election, and then rally upwards. We're going to get new highs. We're going to touch these 2200s. We didn't get a chance to touch them here in August and September on these tops, but we sure as heck are probably going to do it at some point in the next couple of days. All right, I think the world's just waking up and saying, hey, a Donald Trump president is not going to be that bad for the economy. Be that as it may, I know there's riots going on across the country, so who am I to say that, right? But just who cares why the market's going up? It's funny, whenever that we see upside or a massive move, suddenly nobody that trades or has dismissed it starts text messaging me, emailing me, saying, hey, George, what do you think of this? I have no opinion. Why did this happen? I have no opinion. I must have said that a million times in the last couple of days. It's funny that once volatility gets injected in, all traders and people that aren't even traders are saying, wow, you must be making a fortune. Well, you got to catch some of this. All right. You can't hear me, just the lady. 1 second. Can you guys hear me now? Hello? 1, 2. There you go. Can you guys hear me now? Sorry, YouTube. We just had a problem here with some of our subscription webinar is great. I think it's working now. All right, so in terms of the market, we're going to get some more upside to 2200. Apologize about that, guys. 2200 is going to be our upside target. I think we take out some of these highs. We're ripe for a rip higher. I mean, Carl Icahn came out and said he bought $1 billion worth of equity. So as Donald Trump was still campaigning and waiting for the election results, Carl Icahn left the party and went to buy $1 billion worth of equities towards the low here. At 28.50 is when we traded limit down, and we traded that live in our room together and had some opportunity to make some really good money. And we said off those limit lows, I told you guys specifically what to watch for. If we hit limit down, that means you can't sell anymore. And if you can't sell anymore and all these sellers have accumulated towards these lows, that means there's nothing but algos waiting to pump this thing up to run some buy stops. And that buy stop running happened very quickly and exhausted itself in just as quickly as amount of time. So I think the upside is where you got to focus towards. Right now, everyone's buying dips, and you shouldn't be any different. You shouldn't be trying to short here yet. If you want to short, wait for some patterns like this. You need some topping definition or some chart definition to come in to support a short. At the moment, if you're just shorting this is just a best guess. You're gambling at this point. All right, oil, however, looked weak off of inventory data yesterday. These 44s, we said we're going to hold as support. We peeked through them temporarily. We touched the 43s, and now we've rebounded. I think we see some more upside here in oil up to maybe 46.28, but oil's still weak. This has been one of the big divergences. Oil has been weak as equities have made almost, or got within 10 points of new highs. So we're following through on. Bonds are getting spanked. All right. Gold went up to as high as 1340. I love gold. But then it quickly got sold off, and now it's back down to these 1260s. At 1300, I told our subscribers I felt uneasy holding this long trade anymore, and I was long at 1250. So I caught that pop, got out. You know, at some point, GTFO. During the election, you feel that this thing's up to 1340. You're saying, wow, I'm going to buy gold. And a lot of people got suckered buying that high. And that's precisely where you should be selling it, okay, because there's this mid-range chop. So there's a lot of volatility going on right now in the market, a lot of rotation, a lot of assets. Yesterday, we had 5 million contracts traded on the S&P 500 futures. So just be careful out there. If you have some kind of idea or position you want to take, take it, but make sure you manage your risk. Okay, right now the markets are ripping higher. There's no reason for you to be looking to sell. Look for entries to get into. All right. So a lot of questions have come in through email asking me, how do we position ourselves for the long run? And I always ask, well, what is the long run to you? All right. To me, the long run is 20 minutes. To you, the long run might be years ahead. It all depends on whether you're managing a portfolio for yourself or trading, or you're doing both. For my own portfolio, what I'm waiting for is for the dust to settle here. All right. I want to see these S&P 500s come out at this 2200 and see what happens. If we get above 2200 and we push 2230s, and I'm not on board a long trade, great. At least I'm not buying the high, okay? Because it's got potential to hit some of the offers here and push the price lower. So I'm not in a long-term sequence. I'm 100% in cash, and that's where I'm comfortable being. If you want to take a shot for something longer term, go for it. But let me show you what we're kind of the dynamic in the equity markets. Look at Amazon today. Has anyone looked at it? Took a kick into you know where. Terrible day, massive sell-off in Amazon. Let's look at Google. All right, had also a bad day. Let's look at Netflix. Equities have recovered a lot. None of these stocks have, however. The S&P 500 futures are trading higher. Here's Netflix. This is a trade that we were short from above 128. I published an article saying it's time to short Netflix at these 124s, and then I said, you know what, 128 is the time to do it with all this resistance. There you go. There's some money you could have made. Does this make a good buying opportunity on Netflix, says somebody? I don't know. Does it? You tell me. I think the level to watch for is 112s right here. Okay, previous high. There's some consolidation chop here. That's a big line that you want to put on your chart and follow. These 112 should be good for a bounce. All right. Let's look at gold, GC1. We got to look at the technicals chart as well. GC1. And I'm going to give you guys some news that's come out so far on the wire today. That's rattled markets a little. Okay, we got a lot of strong stuff. We'll look at futures in a minute, actually. Let's look at gold. Okay, on this downside, volume's accelerating on gold. Momentum starting to curl over. We just broke the 200-day moving average again. Downside is where we're headed. All right, I wouldn't be surprised to see gold at 1220 in the next 3 to 5 sessions. I know it's a crazy prediction, but we're heading down to 1220. How long it takes to get there, I'm not as certain about that, but I know that's the level at which would be a support, and I'll start buying it again. 1220 to 1210. I'll start buying gold all day long. Right now, not a chance. Not right here. No way. Let the amateurs and rookies buy that stuff. Not for me. DXY, this is the dollar index. You could see the dollar's had a turbulent ride as well. On Donald Trump win, down it went, and then absolutely rallied back up to these 99s. So we're kind of where we were before the whole Comey disaster. We're much higher now, but in most assets, we're kind of back to risk on. Like nothing's changed, except it has changed. We got a whole new policy and a whole new government. But we have we got a Republican House, Senate, and President. So they should be able to push some policies through. Here's some stuff that came out on the wire at 12:52 Eastern time. Trump spokesperson Dodd-Frank will be replaced with new policies to encourage economic growth and job creation. All right, that came out literally a little while ago as we talked about it. So he also went to meet Obama this morning. Trump did, to talk about the transition plan to him being president. It's happening, guys. Just accept it at this point. All right. Fed's Lacker was on the wire at 1 p.m. You got to know this stuff. Fed's Lacker, he's a hawk and he's non-voter. Basically, he just talks hot air and steam, but doesn't really matter what he says because, remember, he doesn't have a vote. If a FOMC member has a vote, then listen to him. If they don't have a vote, then just kind of take it with a grain of salt. He said, economic recovery seems disappointing to some due to slow productivity growth. Low productivity means that rates need to be lower. Case for raising rates is relatively strong, even given events of this week. No doubt Fed will discuss rate increase in December. A range of views remain on the FOMC. All right. The fear for a Donald Trump president is stimulus. It's the S word. It's not a rate hike. It's stimulus. More free money. More care packages being airdropped on top of the S&P 500 as it's rallying upwards. And that's an inflationary thing. Okay. So I don't know what's going to happen here, but I know it was about 50% chance that there was a Fed rate hike throughout the election, and now it's back up to over 80. Yeah, that's a really long out term. Honestly, I wasn't. I'm not a financial advisor. I'm a trader. There's a big difference. All right, financial advisors tell you what to buy. for 5 years out. I'll be happy to tell you 10, 20 years out. I can't even tell you if I'll be alive that long. Like I know nothing. As a trader, I've accepted I know nothing about the market. The only thing I know is how to read the price. I don't know where it's going to go. Who the heck knows? I'll tell you one thing, though. As it's going there, I'll get on board when the time is right. And that's the skill set we're trying to develop as traders. Everyone is so fixated about where is things going to go? Why did something happen? Who gives an S? Who gives an S at the end of the day? Who cares? Who cares where it went? Because, look, if I had told you, let's be honest with me here, and everyone on YouTube as well, if you're on board, if I had told you at 2035, buy it right now, it's going to be up to 2170, what would you have told me that day? You would have told me two words. One of them would start with an F. And today, you wouldn't have bought that dip. I guarantee you wouldn't have bought that if I told you it was going to be at 2170. And today, oh, darn, I should have done it. See, number one, I didn't know it was going to be up here. There's no one could have predicted it. Number two, even if you know where it's going, the question is, will you get there with it? Will you be disciplined enough to ride that up and find transition moments to get into your trades? And that's what counts. That's where the money's being made. All right. So here's some trade ideas I got for you guys. My outlook on the market is bullish. This kind of thing doesn't just happen based on no volume. This is driven by institutional volume. I'd love to see the commitment of traders report this Friday coming out at 2:30 p.m. Love to see what they did. But as you can see, I think a lot of people in through these highs here got long. And I don't think I'm wrong about that. I think through August to about October, just about everyone and their grandparents and their children and their pets and their plush toys got long. Buy the dip, buy the dip, buy the dip. Okay, well, buying the dip worked and then suddenly went down. Okay, market pop post-commie. Okay, started to go down again. And then what ended up happening, we shook out all these longs. Imagine being the people that bought this long and finally got stopped out and said, this thing stinks. I'm going to turn out and sell it. And then you try to sell it. You push the market lower. You're right temporarily. And then boom. There go your stops. Back up to the upside. What ended up here is we had way too many people that were long. Far too many. After this post-Brexit crash, we convinced some people up here to start buying. They bought it. We had way too many people long. We shook them out. Where did it stop? Right where I said it was going to stop. Right in the middle of this consolidation, some of these peaks, and this consolidation as well. Okay, so now the downside's over. Look at this. We also touched our 200-day moving average that we rallied through. All right, look at these bearish targets I have on here. Isn't it funny that we just barely poked through there and we came back up, barely poked above, and came back down? How do we get these targets? I ain't telling you. You got to become a Trade Pro Earn Package subscriber. We do this every Sunday. It's a big secret. It's a proprietary algorithm of secretness. It's actually a very simple trick. Yeah, I agree. It does make sense. I'd like to short-term thoughts on oil. I could definitely do that. Let me save that for the post-YouTube update. All right, guys, for YouTube, I hope you've enjoyed this. I hope I've given you some kind of rationale logic. I know you probably want an explanation as to why things happen, but I can't give you that, and nobody else can. The best thing I could give you is say, find dips to buy into right now in a 15-minute chart. For the life of you, don't buy this. Okay, but we get down to these 64s on the index, maybe to 60s, and we start bouncing around here. Try it. Go ahead. Try a shot long. 2160 for the longest term was our midpoint here that we were saying above we're bullish, below we're bearish. Well, went in, touched it. We found our buyers. So wait for the dips. 64s could be a good place to enter. You know, 66 to 68 is a little bit more aggressive, but for the life of you, please don't buy it here. It's too late. Everyone that's already bought it is probably already selling now. And the people that bought it here and here and here, as price goes closer to their orders, they're selling to get out because they almost broke even. That's going to put downside pressure. Can we go in here and smash these 2184s? Yes. But I'm willing to miss that because that's a higher risk trade than just waiting for a dip, support, and then get on board that rip. Okay, guys, have a safe session. We'll do some more of these midday updates throughout the next couple of weeks. It's going to be very volatile. I suggest strongly, if you have profits in your trades, let them pay you. Take money out of your trades. If you're up a little bit, don't get greedy and wait overnight or do anything stupid for waiting for a 10, 20, 30, 40% return. If you already got 5 or 6, take some off the table. If you never take profits, you'll never get paid. Think about that. All right. All the best, YouTube. Have yourselves a wonderful afternoon. We'll do another one of these updates shortly. I hope you enjoyed this one. Take care. Subscribers to the room, hang tight. I want to just shut that down, and then we'll talk about some oil and ES trades for the remainder of the day.